from Bloomberg's world headquarters in Midtown Manhattan, I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, Bitcoin is on the way back up and has gained for 4 months in a row amid broader market jitters about banks and the Fed's decision tomorrow.
Meanwhile, the crypto exodus from the U.S. is picking up steam as regulators crack down. The latest move, Coinbase is launching an international exchange in Bermuda.
And that move will be one of the focal points when Coinbase releases its quarterly results on Thursday. We'll have more on what to expect from that report. So all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will see is, as I said, the broader market is lower. Bank stocks really taking it on the chin today, and yet digital assets are outperforming. This is the idea that digital assets actually benefit when the banking system is not so secure. Bitcoin right now up about 2.9%, trading just shy of $28,500. Ether at $18.55, up about 2.6% on the day. And as for some of those individual stock stories tied to this space, MicroStrategy, which of course is a massive holder of Bitcoin, reported after the bell yesterday its first profit in 9 quarters. So that, along with the gains we are seeing for the currencies themselves, taking that stock up 4.5%. And Coinbase is up 3.2%. As I said, Matt, we're going to have more on that story in just a little bit.
Yeah, so it seems like, as you mentioned, the banking turmoil and also what looked like at one point an endless string of rate hikes from the Fed was pushing Bitcoin higher. We've seen, indeed, 4 months in a row of gains for the original cryptocurrency. That's the longest streak of monthly gains we've seen since back in 2020, 2021. And you thought yesterday that the banking turmoil was over. At least that was the sentiment in the market. You may have thought as well that Wednesday marked the peak of the Fed rate hike cycle, but that's also being put into question slightly. So the question is, can we repeat with another gain for Bitcoin price during the month of May? Joining us to talk more about this is Meltem Demirors, Chief Strategy Officer of digital asset investment firm CoinShares. So Meltem, let me first get your take on the thesis that problems with, regional banks in the U.S. have put some impetus behind Bitcoin or under Bitcoin and driven the price higher. Do you buy that?
I don't think it's the banking crisis or the lack of confidence in the banking sector necessarily. I really think a big driver is the decorrelation of Bitcoin with other asset prices. Bitcoin's correlation with global equities is down to its lowest in some time, hovering at around 12%. I think what we are seeing is across all markets is investors, despite the macro environment and concerns about rate hikes, are still fairly comfortable buying risk. And I think we are going into a new crypto cycle. We have a Bitcoin halving coming up. We're seeing a lot of exposure via the derivatives side of the market. So I think it's not just the banking crisis in particular in focus here, but it's really a broader appetite for risk and investors perhaps getting comfortable reallocating and continuing to be exposed to crypto. How
much does the Fed's rate hike path matter, Meltem? I mean, we're expecting another increase in rates tomorrow, putting the top up at 525. And obviously, Bitcoin is an asset that doesn't yield anything. With all of this competition, you can get more than 4% from 2-year treasuries. Is that a problem for Bitcoin, a headwind? I don't think it's a problem for Bitcoin specifically. I think where we're seeing more of a slowdown is in the decentralized finance or DeFi landscape, where people are historically accustomed to seeing yields on lending out stablecoins or on-chain dollar equivalents. And what we've seen there is yields on stablecoins in different DeFi applications are down quite a bit. You're getting about 2 to 3%, whereas, in a treasury, a fairly low risk to risk-free asset is yielding 4 to 5%. It just makes it much more challenging. And we've seen that reflected in the numbers. On-chain activity for Bitcoin and Ethereum in particular, down around 15% in the month of April. Stablecoin activity and volumes down closer to 40% on both the Bitcoin network and Ethereum network. That's the predominant trade pair for most crypto derivatives. So we are seeing a decline in on-chain activity. But I think, again, the investment thesis for Bitcoin, particularly for long-term convicted investors, such as MicroStrategy and others, is still very much there.
Well, as we're talking about the investment thesis, though, there's the question on regulation and how that may hamper the investment case. And on the regulatory point, Bloomberg spoke earlier to Charlie Morris, the co-founder of the VC fund CMCC Global, who said that the U.S. crypto crackdown is opening up opportunities elsewhere, specifically for Hong Kong. Listen to what he said.
The US is being quite negative from the regulatory perspective, and it really kind of seems to us that the US is really, shooting themselves in the foot with a machine gun, and that gives kind of a golden opportunity to other regions of the world.
Shooting themselves in the foot with a machine gun, Meltem, it's quite strong language, but is that also kind of your sense of what really is going on here?
I think it's really important to differentiate who is actually in the market and what market participants we're talking about. When it comes to derivatives, as we saw this week with both Coinbase and Gemini, two very US-centric, US-focused exchanges launching offshore derivatives-focused platforms, certainly the derivatives part of the market has shifted overseas and continues to be overseas. I think we do have a fairly healthy and robust crypto ecosystem here in the US. There are many regulated on-ramps, whether it's crypto native companies or fintechs and other more traditional financial players. But I think the biggest challenge is where is growth going to come from? And by and large, the derivative side of this ecosystem is still the largest and drives the majority of interchange. And that certainly has shifted overseas and continues to trade overseas.
Speaking of where growth is going to come from, what's next for CoinShares specifically, Meltem?
Well, we will be reporting our Q1 earnings fairly soon, so be on the lookout for that. And in those earnings, we'll share more on our strategy. But given that we're publicly listed, I'm not going to say anything that we wouldn't put in our financials and our quarterly update.
Can I ask you about stablecoins, Meltem? Because this is an area where, Kayleigh talks to regulators all day long on the Hill. This is an area where people on both sides of the aisle are confident that we could get some kind of regulation. And we've seen Tether come back to a market cap of, $80 billion almost a year after the collapse of Terra Luna. Do you think stablecoins are, the way forward when it comes to a U.S. foot in the door?
I think stablecoins are certainly seeing a lot of traction. And what's really been exciting over the last 3 weeks is 3 major U.S. payments companies, PayPal, Visa, and MasterCard, have all announced initiatives to expand their utilization of public blockchain networks, not necessarily with the underlying native crypto assets, but with these stablecoin assets. And if you think about the challenges just in the U.S. payment system, the Fed is launching FedNow, their faster payment service, in July. It's going to be slow phased rollout, though, low transaction limits. But we have all of these frictions, particularly moving money cross-border as well. And this is an area where I think public blockchain networks and this idea of a currency for the internet really shines. And so I think we're going to continue to see integration of stable coins, not only into the payment system, but also very importantly with the shutdown of Silvergate and Signature, both of whom had 24/7, 365 cash settlement networks. We're going to be seeing the utilization of stable coins in interbank settlements as well.
Meltem, how much does FedNow, which is supposed to launch this summer, disrupt that?
I honestly am curious to see that as well. I think I'm not as optimistic about FedNow. As I mentioned before, the limits on FedNow initially, I believe, will be about $100,000 per transaction. If we look at crypto, crypto really is this big hot ball of money. It moves in high volume and high velocity, high speed all around the world. And so the challenge is, how is something like FedNow going to interact with this big hot ball of money? I just don't think initially it will have the size, the scale, the capacity to handle that. And then more importantly, the question is, what are those key corridors where we're seeing trading happening? If we see the crypto derivatives market continue to move offshore, and if U.S. trading platforms like Gemini, Coinbase, and others continue to focus their growth and expansion efforts offshore, then I think the impact will be fairly minimal.
All right. It definitely be something we're going to be following, of course, and talking about more and more as we get closer to that date. Meltem, great having you on the program. Thank you so much for joining us. Meltem Demirors there of CoinShares. Now, coming up, more on Bitcoin's winning streak and more on the bank jitters. David Brickell of Paradigm joins us next.
And Coinbase is launching an international exchange amid tensions with U.S. regulators. And we've got those details ahead, too.
By the way, to access all the latest data and news on crypto on your terminal, go ahead and type CRYP Go. This is Bloomberg.
We have seen a decrease in volume and market depth and liquidity translating into higher volatility. That, for now, is an indication that even though there is a positive, sentiment around the price of those assets, markets are not back to their kind of pre-2022 crisis amounts in terms of volume and market depth, most importantly.
That was the CEO of crypto data provider Keiko speaking on Bloomberg Crypto last week on the liquidity landscape. Joining us now for more of that discussion is David Brickell. He spent 18 years on macro trading desks. Now he's the director of sales at Paradigm, which is an institutional liquidity network for trading crypto derivatives. So, David, welcome. So great to talk to you. Thank you for being here. So, as I said, you operate a liquidity network. Given that, what is your read on the liquidity situation currently, and what is your role in it?
Yeah, well, so as you say, Paradigm is the sort of primary crypto derivatives options trading platform for institutions. And actually, from our point of view, we've seen an explosion of volumes so far in 2023. Q1 was a blowout record quarter for us. And I think that speaks to the fact that, there's a number of reasons why that is, but I think primarily it speaks to the fact that institutions and institutional involvement in crypto is becoming sort of more dominant. You've actually seen sort of crypto options block trading, which is effectively what we do at Paradigm. You've seen that sort of take like a 40% share of sort of crypto options trading, and subsequently our Paradigm's volumes of the market are sort of around 40% as well. So I think compared to the spot markets, actually what you're seeing, certainly in the sort of crypto derivatives and option markets, you're actually seeing sort of greater participation from the sort of big institutions who are really kind of stepping into the market. And it's interesting, if you look at sort of the post sort of FTX scenario, we had like a 1 month slump. And then we sort of came into January and we really sort of started firing. And obviously we've had this nice kind of macro thematic to sort of play, and with Bitcoin kind of reasserting this sort of digital gold type narrative. We've actually seen sort of really decent volumes and sort of liquidity improving as a result of that on the option side.
How much of that do you think is tied to the growing expectation that we have seen building in 2023, the idea that the Federal Reserve is going to turn around and start cutting rates by the end of this year? How do you think those two stories are tied together?
Yeah, I think the one thing we've all now sort of became accustomed to is the idea that crypto is trading these sort of macro cycles. I mean, there's a lot of talk around the halvening, but actually the sort of macro cycles are super important for that. And if we look at what happened sort of throughout last year, we had perhaps, the sharpest Fed tightening cycle in recorded history. Alongside sort of double-digit inflation. And as we've now transitioned to this sort of peak rates, peak inflation, peak Fed sort of world where we're likely to approach this pause, that's now creating this kind of constructive macro environment for Bitcoin and the sort of broader crypto sector to start sort of trading more positively on. And I think as we're starting to see that, that's then drawing in the institutions to start playing that thematic.
David, when I first heard about Paradigm, it's a liquidity network. I thought, oh, is it a market maker? No, it is not a market maker. What you do is network big institutions that want to pool, I guess, crypto assets, right? But you don't hold them in a centralized location. Explain to us what it is and tell us how much institutions have been part of this most recent run up to 30,000.
Yeah, so we're like a pure tech layer that sits on top of exchanges. So you can think of us like an OTC trading platform where the settlement layer happens at the exchange level. So we're just trying to provide, you shouldn't have to sacrifice on liquidity for your choice of settlement venue. So the idea of Paradigm is that, you find that wholesale liquidity. And then we sort of settle and clear at the exchange level. So what it's doing, it's allowing, because we're not impacting exchange order books, it's allowing for trading larger size and getting sort of tighter prices and a greater depth of liquidity. So it's really allowing the big institutions to find that depth of liquidity that they need to trade the sort of size that they need to trade to sort of play in this market.
Super interesting stuff. David, I know that you are sitting there in London, but I'm sitting here in Washington where all of our conversations are dominated by the looming X date and questions around the debt ceiling. In theory, the U.S. could default on its debt as soon as early June. Is that something that would actually be positive for crypto assets because it would undermine the strength of the dollar? I mean, how do you see this filtering through into this world?
Yeah, I think there's two big drivers for crypto are rates and liquidity. My one big concern around when that sort of X date arrives and the debt ceiling gets lifted is actually short term, you're going to have this kind of liquidity draining event whereby the Treasury are going to be able to issue bonds again and drain liquidity out of the system. But ultimately, it kind of feeds into the big picture narrative around this idea that this kind of these fiat economies can only really survive on more and more debt. And the consequence of that is you're over time debasing fiat currency. And obviously that kind of store of value argument then for Bitcoin and the whole reason that emerged just grows stronger and stronger. So I think what we see is that, the debt ceiling will get lifted. It always does. And aside from the short-term liquidity impacts on markets, which I think will be a challenge, all things equal, what you'll see is, again, just this kind of currency debasement theme sort of gain more traction, and ultimately over the sort of medium term, this again will be supportive and bullish for Bitcoin.
All right, David, great having you on the program. Really appreciate your insight there. David Brickell of Paradigm talking to us about the system and how it works, and also how, from the crypto point of view, maybe it won't work forever. Coming up, Coinbase launches an exchange for traders outside the U.S. More on their tensions with U.S. regulators next.
And be sure to check out our Bloomberg Crypto podcast every weekday, wherever you get your podcasts. This is Bloomberg.
This is Bloomberg Crypto. I'm Matt Miller in New York with Kaylee Lyons in Washington. Let's get to some crypto stories that caught our attention this week. The co-founders of failed crypto hedge fund Three Arrows Capital have found themselves in trouble in Dubai. Authorities are reprimanding them for operating and promoting their new digital asset exchange, OPNX, without the required local license. Dubai has been taking a stricter approach toward crypto, even as it tries to position itself as a hub for the industry.
And MicroStrategy has posted its first profit in 9 quarters. That's after registering a tax benefit related to its hoard of Bitcoin. Shares of the enterprise software maker, which is the largest public holder of Bitcoin, are up almost 120%, more than that now, actually, so far this year.
Coinbase is launching an international derivatives exchange for institutional crypto traders outside of the United States of America. The new platform will list Bitcoin and Ether perpetual futures starting this week. In a blog post, Coinbase wrote, the company is committed to the U.S., but countries around the world are increasingly moving forward with responsible crypto-forward regulatory frameworks to strategically position themselves as crypto hubs. We would like to see the U.S. take a similar approach instead of regulation by enforcement. Like Bermuda, for example. Joining us now for more is Bloomberg's Katie Greifeld. So it's an exodus. Is it?
I wouldn't say it's an exodus necessarily, but it is a diversification, you could say, by Coinbase. Of course, we know that they've gotten in a few tangles with the SEC. The Wells notice that landed in March is just the latest. So again, moving to Bermuda, offering this in Bermuda, the plan is it's going to list Bitcoin and Ether, perpetual futures. And I think this is very important. They took care to say that this initial international exchange is going to be in Bermuda and only for non-U.S. institutional clients, so not for U.S. players.
Probably targeting some of that language at the SEC, trying to be very careful about what it messages here. And I mean, we have to consider that this is a regulatory question that is an overhang on the stock. You had Citi downgrading Coinbase to neutral yesterday because of regulatory uncertainty. So this could, in theory, matter financially for this company. We're going to get a better read on the financials, though, on Thursday. Katie, what should we expect from these earnings?
Well, of course, any commentary, any sort of executive commentary around those regulatory concerns is going to be front and center. But to your point on the stock, I was just looking at this. It's really interesting. Of course, Coinbase has had a fantastic start to 2023. The stock is up 44%, not too bad when you think about what this S&P 500 is doing. But then you look at Bitcoin itself. Bitcoin is up to the tune of 71% in 2023. So this absolutely has been a weight on the stock. We know that volume in terms of what Bitcoin is actually doing, how it's being traded, has gone down, even though we have seen this big rebound in the coins themselves. So any sort of insight on what the regulatory temperature is and how perhaps they're trying to make up for that lost volume